Hi everyone and welcome to 3 Minutes with Mark for March 2026. What I want to talk about today is property and the proposed removal of the CGT 50% discount. Now, you might say, what's so exciting about that? Well, the question everybody has is, how will this impact my property investment? And secondly, why do we need to reduce the 50% CGT discount? The answer to the question why is pretty simple. Australia's got a gross debt level approaching $1 trillion. It was $500 billion going back to pre-pandemic times. So there's a big hole to fill. Two issues I won't address, which could help though, and that is corruption, 15 billion to 30 billion. It's on the front page of every newspaper. Government spending reductions, also something that economic commentators are saying would help. I'm just going to focus on property and CGT. And when you look at the CGT discount, you need to think about what's the rationale? Why is it even there? Well, it's called the CGT discount, 50% CGT discount, which is a really unfortunate name for it, because before this, we had an indexation method. And what that meant is that when you sold your investment property, you were able to index the cost base of the property so that when you went to sell, you're only getting taxed on profits that were for real gains earned. So then we swapped that over for a CGT discount, which is basically a proxy for the same thing. Is it working? So for me, that's the starting point. Always go back to the policy, always go back and see whether it's working. Some commentators are saying it's not meeting key tax criteria for it to be a successful concessionary policy. Others are saying it still works. People need to do the numbers on that. Here's my take at a high level. Any change in the way in which it's going to impact property will depend on the nature of the change. Let me give you an example. If you eliminate the 50% CGT discount or reduce it substantially to 25% overnight, investors who own properties today, investment properties, they will keep those properties, they will not be selling. This is because they want to maintain their concession. This means less properties are going to be available on the market for sale. That means increased rents, housing problem not solved. If you discount, as some are suggesting, the discount to zero over, say, 5 years, this means investors will likely sell now because they want to maximise their sale, they want to maximise their concession. Let's do the maths. Sounds good for buyers, more properties on the market today, but who's buying the properties? Is it people who are relying on the bank of mum and dad, in which case they could have always relied on that anyway, or is it people that are really requiring these properties to live in? The bottom line is always this, and I've said it before, you need holistic tax reform. Let's have a look at how does the 50% CGT discount interact with other aspects of the tax system in Australia? What are we going to do about personal marginal tax rates, which are the highest of OECD countries, one of the highest? GST, 10%, has not changed since 2000. What about negative gearing? How is that going to impact the system? And are we talking about property, or are we going to have a bit of a surprise and it's going to impact all asset classes and government might do a backflip? We don't know. So look, these are all the issues that need to be addressed. Must have holistic tax reform. Always been in favour of that. Hopefully this is giving you some food for thought in the discussion around the proposed CGT discount. Please keep in touch. Any queries, you can direct them to me personally. Speak to you soon. Have a great month.